In order to make an entry after your analysis, there is a need for you to have an entry trigger which will confirm your position of entry before placing your order as far as trading is concerned. So in this video, I'll be sharing with you some secret entry confirmation that you will need at your point of interest, being it order block, being it fair value gap, being it support and resistance or trend line, as the case may be, depending on your analysis, which you can use to make confirmations for your entry. This is Soji and you are welcome to Soji FOREX. If you are coming across a video across this channel for the first time, here we share ideas on financial market. We share with you how you can trade, take advantage of the strategy we shared, and apply them after backtesting them on your demo account and bring a change about in your trading experience. So in this video, I will be sharing with you 3 easiest candlestick patterns that you can use for your confirmation in making your entry at your point of interest. And the number 1 of this candle is the pin bar candlestick formation. Pin bar candlestick formation. And what is a pin bar? A pin bar is a candle that has a body and a wick. And what I'm trying to refer to is, assuming this is our candle, then it has a body and a wick. Okay, so this is what a typical pin bar look like. You can see it can have a wick at the upside. It might not have a wick at all, and it will have a wick at the downside. So a pin bar is a candlestick pattern that has a body and a wick, and the wick must, a valid pin bar wick must be 2 times or more bigger than the body. Now what we are saying in essence is this particular body of this pin bar you are seeing should be less of the wick. In other words, this wick is 2 times more than the body. So the higher the wick, the more valid the confirmation of the candlestick pattern. And when we talk about pin bar, of course, you should know that we have basically 2 types of pin bar, depending on where it is happening. Like this one now is happening on a support zone, and so we can refer it to it. This is a bullish pin bar, and this one now happening at our level of resistance. We can refer to this as our bearish pin bar formation. Okay, now this is a support, and then this is a bullish pin bar, and here at the level of resistance we have this rejection which gave us this body. This is a bearish pin bar. So this is for a sell confirmation and this is for a buy confirmation. Another candlestick pattern is the engulfing candlestick pattern. Engulfing candlestick pattern. And when we are referring to an engulfing candlestick pattern, we are referring to a candlestick that covers the entire body of the previous candlestick's formation. Let's say, for example, this is our bearish candle, and then we have another formation of a bearish candlestick that was formed. So here is a typical example of a bullish engulfing candlestick pattern. So it means that this is a bearish candlestick, and immediately after this bearish candlestick you now have a bullish candlestick pattern. So it is a candle that covers completely the body of the previous candle, which, let's say for this has been coming in a downtrend. So once you have this bullish engulfing candle, it gives us a change market direction. So it can be a confirmation for us to enter a buy. So we are having this bearish, and then suddenly at this support we are having a bullish engulfing candle. So this is a second candlestick pattern that gave us a confirmation for a buy. So this is a bullish engulfing candlestick pattern, and in the same way we can also have this as a bearish engulfing candlestick pattern as well, depending on the market situation and scenario. So what we are saying in essence, that here over time we have been having market making it move to the upside. Okay, now we're having market pushing up, bullish candle, then all of a sudden we now have this bearish candlestick formation. So you now see that from this previous candle, bullish, we have this bearish engulfing candlestick formation that engulf the previous bullish candle, and this gives us a reversal signal for a sell trade confirmation. So these candles are not traded in isolation. You trade them either as a level of resistance or as a level of support, or you are trading them at your trend line zone. For instance, you are having a trend line and you find any of these candlesticks, it is valid. Okay, so this can be traded at our level of trend line such as this. So we are not trading them in isolation as the case may be. Okay, we are trading them based on either a trend line, or we are trading them based on support and resistance. Also, it can be based on our point of interest on a moving average. Okay, it can be on a level of Fibonacci. So anything you are using, this is a confirmation for your entry. And it is very important that at times, once you have this signal, you will need to wait for a follow-up candle, another second bearish candle, for you to make your entry. So this is a typical example. And then the third candlestick pattern is our evening star formation. Let's assume that this is a downtrend, the market is moving down, then suddenly we have this. Okay, it means on this particular candlesticks, now you realize that this wick up here and the wick down here is equal, of the opposite direction, is equal to the body of the candlesticks. So, and as such, it serves as our reversal signal. And then once you find it, you now find a bearish engulfing candle. You see that the market has been bullish and bullish. Then at your point of interest, you get this evening star. Then this is the follow-up candle. Then you can make your entry for a bearish market entry. And then for a bullish, the reverse is the case. The opposite of this will give you a bullish entry. So the easier candlestick pattern, which have been backtested and proven with almost 80 to 90% accuracy, is the pin bar candlestick formation, the evening or morning star formation, and then the engulfing candlestick pattern. So looking at this chart now, you realize that we have marked out our trend line, which is serving as our zone of support and resistance. Okay, and then you can look at this particular candlestick formation. There is this rejection from this upside. Okay, and this rejection, this is a typical example of a pin bar. The wick is not up to the wick is 2 or 3 times, even 4 times of this, and then you can see you make your entry here, your stop loss is below, and you see how price has been respecting it. Alright, here we have a bullish engulfing stick candle. You can see now this market has been bearish, 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 and then suddenly we have a bullish engulfing that covers the body of the previous bearish candle. And you can see how it plays out massively. Okay, and afterwards, look at this. This is a typical example of this is a morning star formation. This is a morning star formation. Now you can see immediately after this morning star formation, the color is not important. The color of the candlesticks is not important. What matters is the understanding the formation, and upon this you wait for this bullish candle which forms as our follow-up candle. Then you make your entry here. Your stop loss is always below that, and it's a beautiful move to the upside. Here as well we have a pin bar. You can see now this is a bullish pin bar. What matters is the understanding of it and from the zone which is happening from. Okay, it's happening from a zone of support of the trend line, so it is being regarded as a bullish candlestick pattern. It's almost 2 times the wick of the body, and it plays out beautifully to the upside. So this is how you can take advantage of this. And remember, we also talked about that this can be found either at a zone or at a level of the moving average. This particular one now is happening, you can look at this, it's happening on our 50 EMA, and you can see the candlestick pattern, and you can see how it plays out beautifully well. This is another one. This is a double confluence happening on the EMA, happening on our trend line, and it plays out well. Here again we have another entry. So this candlestick pattern, backtest them, master it, and take advantage of it. Here also we have another pin bar, follow-up candle, and then it's all a win-win-win. And I believe you are getting value from this video. Please do not forget to like, forget to share, and above all, subscribe to the channel, turn on your notification bell so you'll be the first to get notified whenever I publish our next video. See you in a subsequent video.